So, hello, and a massive hello to everybody. Hope everybody's having a great day wherever you are, whatever you may be doing. This 50 pips rocking and rolling here, doing a little bit of a midweek update. No trade calls or no recommendations. Everybody responds for their own stuff because we're here for educational purposes only. So, what's going on? So, we've got a couple of themes here. Not a lot has changed, but just a quick update. So, here we're heading into very interesting times after the action we saw yesterday, and we said at the beginning of the week there are going to be a lot of a risk across the board. I'm not going to go through all the things we discussed in the weekly Outlook Sunday video, but again, and as we highlighted also in the weekly webinars, there's clearly a case to be made for that crescendo or grind higher and pump higher, drift higher, all the way into the climax, which is going to be FOMC and Apple earnings next week. But our base case was that were a lot of cross currents, a lot of things that made us want to start to nibble to the short side and hold some short exposure on equities. Not full position by any stretch of the imagination, but still it made sense to have some kind of exposure on, right? And so that trade we had on is working quite well. There's no change in outlook, and there's really nothing to update there. Keep in mind that tomorrow is going to be the big day of the week. Well, again, we've got Boeing earnings today before the open. And then we're going to get Microsoft, Tesla, some of those big names. And then tomorrow is going to be interesting because we've got, that full day with all the PMIs out, ECB, and then at the end of the day we have Amazon reporting. Okay, but on equities, short messages. Not a lot has changed. Let's see what happens today. But this is an interesting situation where it highlights why we wanted to have some kind of short exposure. Now it doesn't mean it's going to work, but that makes sense. Now again, updating on that, the other idea we were looking at for some other a different time frame, right, and different kind of trade is still that short on the yen, right, and that's still fully in play. And again, it's an interesting trade for those who were not comfortable trying to put on or trying to nibble on the short side on equities, because clearly equities have that risk of the grind higher into the FOMC, in the pumps, the overnight grinds. But what was interesting in the yen, right, which is traditionally a risk on risk off pair, is that getting short and trying to hold those short positions on the yen was interesting because it was in line or playing out as we had our call, which was the aggressive short USD call, right? Also that we were looking to get back into that, and that was confirmed once all that data came out, right? And we said it's time to press these. So what was interesting here is that, of course, the dollar unwind, so the short dollar, the long dollar unwind was weighing on this, and what it meant was that even when we were getting those grind higher on the equities, right, this was staying fairly sidelined. So it's a slightly more conservative or nicer expression of that trade for more conservative traders. But it's interesting again to highlight, as we've discussed many times, as we continue to discuss, there's always more than one way to try and express a view or try and express a theme, right? And it pays to try and want to find which one works better for you. And again, risk reward profile, timeline, etc. But again, this trade is fully in play, and we'll have to see what happens here. Now, one other thing I wanted to discuss is if you haven't caught up on the video we sent out yesterday on the detailed outlook on gold and bonds, please have a look at that. And again, for those who are trading that, don't get too excited. We'll call it the low on the bond long play. Again, stay humble, stay focused, stick to the plan. Anything can happen, but that's fully in play. Now, another thing I draw your attention to going into the open, again, after we saw some of the earnings come out, Texas Instruments, is again, keep an eye on how SOX trades today, right? How the semis trade. It's a really, really important area here. We've talked about this many times, and here there's a clear risk that if we can't hold, right, and we close back below, we could see very quick acceleration. Now there's clearly there'll be a lot of supports to get through, but I would not be surprised if we get a little bit of a panic move to see this really come back into the 200 and our target to the downside. So this is clearly something you want to watch into the open. One thing which I mentioned on Twitter, and which is going to be interesting to see. I mean, it's for next week, but to see what happens with Apple here. Like if you look at this on the weekly, remember that 230 is a key psychological level, which was, you know, defended and failed, you know, protected, and the market was hovering. So it's going to be very, very telling, right? I'd say as we go through FOMC and the earnings, if this is still holding above the 230, there's very little chance we see a lot of these bigger swings we're on play out. If this can get smacked down and closes back below, then it may be game on for all those swings and all those trades we have on. But again, remember, trades don't have to go to full targets. The key with understanding location, risk reward, and trade management is to get paid or manage to scratch trades that don't go in your direction. And that's a big theme we've discussed in the past. You know, a lot of people only focus on how to make more money on milk more out of the winning trades, whereas sometimes, you know, the P&L can see incredible improvements if you just manage to scratch some of the bad trades, or through the management of your position, bank some even on the trades that don't play out exactly as you were expecting them to play out. Now, somebody asked me about some tactical new ideas, because not a lot has changed, and something which I mentioned yesterday and we discussed in the weekly webinar, we actually traded a little bit, is dollar CAD, right? Now, especially if we see some kind of the seasonals come in play on some of the commodities here, and if we see stocks pull back a little bit, this I think is potentially, for aggressive tactical players, an interesting location, right? You see we've come back here on the weekly, we've got this confluence of the 200 and the 100, right, defending the 130 zone. Now what's interesting here is, again, as long as those lows from yesterday's hold, and we trade in the webinar some tight longs yesterday, just scalps here. As long as this area holds or we can't get any traction, I really wouldn't be surprised, and what I would expect, and I'm playing for to a certain extent, is for a move back to the 132, 132.50, 130 zone, basically this big cluster of all these moving averages. So again, aggressive traders will already be long with stops below yesterday's lows, which could be a little bit tricky in this thin market, right? We have to see also tomorrow, we got all those PMIs, but I think as long as we see some kind of decent basing action inside this area and the 30 mark is protected, then, you know, I think we got quite a little bit of room to move to the upside. And here, essentially, depending on location, what we're saying is that even though there may be 90 to the downside, if this gets taken out and it hits an air pocket and it tries to clip the round number, the next level of support here, there's if we catch a little bit of a bid and we hold this, there's probably, you know, 150 to 250 to the upside. Sorry, 150 to 200 to the upside. So is it a super interesting trade for the way we trade and the stuff we look at? Absolutely not. If you're tactical, could this be something you're focusing on to see if you can get in some aggressive plays also on a headline, or depending on what's happening in crude and what's happening in equities? Absolutely, absolutely. Okay, so let's see what we get. That's where we are. I'll try and do either this week or next week. I'll try and do that next update on GPB flows and what the whole Brexit means for a number of cross-asset flows. I think we got some interesting ideas shaping up there. We discussed some of them in the weekly webinars, but again, I'll do a detailed video. Guys, wishing everybody an awesome day, awesome rest of the week. Keep in mind, we've got that, again, all the PMIs out and Super Mario on deck tomorrow. Things could get a little bit funky, but as always on ECB, what is important is what happens after the presser is finished, what direction the market decides to take this, and then, you know, the daily close. And remember, following that, the range we put in on the ECB day is going to be a determining factor for, you know, future price action. Have an awesome one. All the best, guys. Bye-bye.